Hello everyone. Bit of a chill vibe tonight, as you guys saw from the music. I love that song. Gets me so calm. How you all doing on this Friday night? It's fun to see 7 of you in here. Usually we end up being 2 or 3 on a Friday night, and I get why, right? Everybody's done for the week, they just want to chill. But here in Rise, we do it a little differently. I am doing awesome. Thank you for asking. Doing great, had a great day. Didn't trade today, I'm not gonna lie with you guys. Because of Symposium, I was unsure of what was going to happen, and I have a tendency that when I am unsure of something or I have diverging ideas, it's usually better off for me to just stand back instead of blowing my account. From my basically my path, this is when I usually do really dumb stuff. So I just decided that today I would not give myself the chance, but we had a beautiful day filled with opportunity, so that's why we're here to review it. Again, starting on the daily chart. What did we expect? Well, I wanted to see a continuation to the downside, first and foremost. But if I see that we are respecting a specific level, and also if you look, this little dotted line right here, what you see right now is 2 degrees power of 3 indicator, the free version currently, but I also run the paid version on certain of my layouts. You see the opening price of the monthly candle. See how we tapped that level and respected it, and on ES we utilized the weekly open to respect it. So that to me is giving me some indication of higher prices. Just starts to form an idea that maybe this move down was just all we needed for retracement, right? Because when we talked about it in our midweek analysis, I said that when we are that bullish, we will not retrace to a discount. We will not retrace deep unless of course we start seeing the structure and then we have a 1 to 2 week retracement, which to me is a change of short-term trend, right? So I don't talk about that as a retracement. But you could anticipate higher prices. The main filter for all of these things is going to be power of 3. And if we see on ES, we did not even trade below the daily open. And on NASDAQ, we barely formed a low, which we'll dive into in the 15-minute. But I did want to showcase that since we were in our daily fair value gap, and we tapped into that volume imbalance below, which is the new week opening gap, if we're being precise, that is where you could anticipate higher pricing and justify taking longs even on a week where, for example, like myself, I was bearish, right? And we had the SMT form yesterday, but we can still see a higher pricing, and more specifically, we can see some sort of retracement after such an aggressive move like yesterday. If we dive down to the 15-minute, and let me prop up my sessions. Now I am testing my indicator. I don't think I want it to show up on the 15-minute chart though. I am gonna have some future settings that are gonna be plotted up, but for now let me just remove these PM levels and let's just look at daily open and midnight open. As we said with the daily open, which is the true days open, we expanded higher, did not form a low on ES, but if you look, there was a bunch of SMT with this level because ES was way stronger and we did not retrace lower. So there was no short-term SMT, but when we look at the swings to the left, we can see that NASDAQ took all of them, but ES left all of this liquidity right here open. So from that point on, which is during lunch, by the way, you had bullish SMT. I did want to showcase this before we dive into it. So I am just going to plot up the SMT. And if we look right here, we also had SMT at this level. Yes, this is what I wanted to see from our morning move lower. So I am going to just showcase it with this swing low. Because yes, there is also SMT at this swing, but who really cares about where the SMT started? The important part is when did it end, right? So you can see that from this point on, you could say that this swing point was not taken out by ES, but was taken out by NASDAQ. So that's what's interesting to me. How far does it run below it? Because yes, of course, from this point on, you say, okay, there's SMT. How far it runs below it has no meaning to me because I'm trading the unicorn. And when my unicorn forms, I'm confident that now price is ready to go up. But as you can see, had a nice upside move followed by a distribution lower and a very aggressive retracement. This is how I am framing it. This is my understanding of the day. We had manipulation higher to distribute lower, return to these opening values, and as we said on ES with SMT, return to midnight open, to daily open, to then expand higher. How could you frame these ideas? Well, we had no low of day form, right? We had no clear low of day up until we traded back down into that midnight and formed the actual low of day to then retrace in our range. We also had Powell speaking at 10 a.m. So let me just mark this out. 10 a.m. news right here, and the same on ES. Since we had Powell also at the symposium pretty much talking all day, right? Just answering some questions. It is a very risky day to trade because you never know when he's going to say something that people might take as an effect to the markets. For example, oh, I'm cutting rates, and then all of a sudden price will fly up, or oh, I'm going to put the rates higher and then price just flies down, which is why I decided personally that today I would not be interacting with the markets. I'm actually going to remove these SMTs since we talked about them. And I did want to showcase that we were trading within the daily fair value gap for the whole day. And on ES, we traded into it yesterday and then returned to it. But for now, I am going to hide these levels because they are going to make our screen clouded. Whenever we have news, what do we look for? Judah swing, right? So if you're looking for higher prices, you're going to look for Judah swing lower. If you're looking for lower prices, like I explained you'd be looking for a Judah swing higher. And actually, this is where I'm going to go back to the daily and see that we did form an order block on the previous day, right? So having that opening price set up, which is something I should have done at the beginning of this, but I am going to do it. So I'm going to mark out minus order block. Why am I drawing it on the opening price? Because I only draw high probability order blocks using the entire candle. So including the wick including the wick, but I can't know if it's a high probability order block until I have at least 2 candles after it to see if there's a fair value gap that formed next to it. So there's not. So now it was more so of a retracement to the upside objective. And I am going to mark it out on ES, even though we clearly traded higher and past it, if we can say it like that. We are within that order block. On ES, the whole daily opens was on top of this. So we are trading in between a daily order block and a daily fair value gap, which we can anticipate price will be choppy. When basically we call this trapped order flow. When you don't have a clear direction, price will be choppy to it. But I'm going to stop speaking on the fact that today was not the cleanest and be happy that I didn't trade, but we're still going to be able to filter out through these opportunities, right? Because what do we look for? Well, Judah swing higher. There's you go. You have your step one. You have your move higher with your time element, which is your news. But when do you know at which point you should engage with price? Well, that's where having a model like the unicorn will help you filter through all of this and allow you to be able to take the good opportunity within this. Because truth is, you're not trading until you have a unicorn. And of course, I'd be looking at SMT at this point, which there is definitely probably 15-minute SMTs on the high, right? I'm going to stop saying probably, and we're going to go check. So from this point on, yes, exactly what I'm saying. SMT right here, showcasing that ES is weaker and that ES is stronger and NASDAQ is weaker. So now that we have this SMT, let me just plot it up with the beautiful little text. We can go back down to the 1 minute and frame this as a high probability objective. And as we saw on ES, right, this SMT lasted a while, started here. So this is the point where you'd say, okay, well, ES took out that level, but not NASDAQ. But we are waiting for a unicorn to form. So even if your SMT was found at this level, we are just waiting for your unicorn to form. And if we look through all of this, there is no SMT at these highs. So this is not a breaker because there was no manipulation higher. We look down, I do not see a breaker at all, up until we see this specific range. And this is one candle. So this might be a little different, a little harder to filter for most people, but this is a swing high to a swing low, just the same as it is a swing low to a swing high. That is a breaker in my book. That is a range, swing high to swing low. So to me, this was very specifically a range. It's a little easier to visualize on ES as it's on different candles, but this to me is a range. And once we break above that range to then later trade below, that is a breaker block in my book. Very mechanical approach. No need to try and filter it and say, oh, this one is not pretty. I don't care. Is it a breaker block? Yes, then I don't need to know more than that. And yes, at lower time frame SMT indeed, very clearly. You can notice that stuff just by looking at the candles. But other than just lower time frame SMT, what you got to notice is this, very specifically these swing points. So this is what a lot of people like to call local SMT. So in your specific time frame, and more specifically lower time frame. But what I see is that the price action I was looking for, the pattern I'm looking for, which forms a breaker block, forms at a key level inside my higher time frame point of interest, where I would be looking to short off of this order block. Now we took out relative equal highs right here, forming the manipulation, forming SMT local. We have intermediate time frame SMT, so intraday SMT at this point, 15-minute. I like to call the 15-minute time frame my intraday time frame. And then from that point on, it's so easy, right? We form the breaker once we trade below this low. Let me mark this out. This also forms a very mechanical market structure shift, which people like to say a lot of things about market structure shift, but to me, it's just a pattern. It's the pattern that forms a breaker block. And then what do you have right here? Well, pretty straightforward, right? I'm trying to use a whole different colors so I don't get you all confused, but I think that is probably the thing confusing you. And if we look right here, we have this beautiful unicorn textbook. You enter here, 3PD array stop loss rule. What do you have? Well, you just inverse this fair value gap as well, right? So this is also, well, actually that would be your entry. I'm sorry, I got you guys mistaken, but truth is I'm entering on the first one that forms. I'm not waiting for it to retrace into this fair value gap, because truth is if it leaves it open, forms a breakaway gap, my setup is just better. I just didn't notice it at first. So let me mark this out. This inverse fair value gap is your entry. This fair value gap above is your second PD array. And then you have the order block right here, which gives you a 41 handle stop. And if we look just to these low resistance swings, that is a beautiful low hanging fruit objective of almost 2R. Very glad to hear you say that, Wolfie. That's awesome. And you are on the right path. If you saw these types of stuff, you got to understand the main value in these price action reviews is not us looking at the charts and saying, oh, look, with hindsight, you could have known that. The real value is going through the list. We are doing top down. We are explaining how you could have thought that price was going to go down at this point. And then, of course, we're showcasing the Rise model, which, of course, in my opinion, is going to be the best model you can trade, right? Because that's the model I made. I'm cocky. I'm arrogant. I love my model. What can I say, right? And as everyone should be. I'm not telling you to trade it, but I'm showcasing every day how I engage with price and why I believe it's the best thing for me. When do we consider 4-hour order blocks instead of the daily? Another thing you can notice from my PA reviews, how often do I go into 4-hour? Almost never. The only times I go into 4-hour is when I don't have a clear daily range or clear daily direction. So basically when we are consolidating on the daily, that gives you very tight ranges, and I can't use daily inefficiencies because there aren't enough or there aren't any at all. So that's when I will go down to the 4-hour and use the same logic I use on the daily, but on the 4-hour chart to gain insight into what's going on. Support and resistance better, 100% Emil. What can I say, right? But if we look at the setup, how do we define a low-hanging fruit objective? Well, I always say 5-minute, what is my current range? Well, a lot of people will tell you, okay, well, this is my current range. But no, truth is, if you're framing this whole move up as manipulation, my real range is this. And it's not me choosing. It's just saying that, okay, well, I'm thinking daily distribution will be lower. I want us to revisit the opening prices like we see here, midnight open. Okay, cool. Then this whole move to the upside is fake. But the overnight movement is too far. Another thing, I'm forgetting to showcase it quite a lot these days, but we had a beautiful London framework, leaving the lows open, relative equal lows, and having our overnight, the London highs being taken out overnight Judah swing. And if we look at ES as well, which I just noticed, we did also take out those lows on ES, which I'm just going to mark out as an objective like this. So our London framework was successful. I said it with no pure bias, they are 56% profitable over the last 20 years. This is all data I've shared publicly, which you can find in the projects tab, right? You'll look at it, intraday draws on liquidity. This is the London framework that is explained there. Matt trades moon phases. Fuck yeah. Moon phases are the way. What can I tell you guys? But going into this chart real quick, you have your range. Where is your low-hanging fruit? Well, my first inefficiency in discount, sorry. In this case, I would have probably looked at this swing low when I'm looking back at it right now, because I do see liquidity, even if internal range liquidity can be swing highs and lows, it is liquidity. So it would actually be not mechanical to target this low, which is the thing I'm looking at right now with hindsight. So this partial would have been the best. But whenever you see these low resistance swings, if I'm targeting this, I know that if it hits this, it's going to hit this almost 100% of the time. Why? Because there are liquidity failure swings in near proximity. This will be low resistance, right? So just because of that, you could have targeted the bottom one, but we're being pessimistic. So let's just say your partial is at 1.74 R, and we look at this and we say your partial came to you in 13 minutes. No time to stress. If you're 13 minutes in the trade, you don't have time to fuck up, especially if you're in no drawdown. This was actually a beautiful setup. Why am I trading NASDAQ? Well, based on the intraday time frame, right, 15-minute SMT tells me NASDAQ is lower, but in the short term, it actually told me that ES was the weaker asset. So this is where you have a little bit of variance, but I'm always going to put more importance on the higher time frame. So of course I'm going to trust the 15-minute SMT. Drawdown literally 1 minute. Yes, definitely a beautiful setup. It's funny because I was talking to some students yesterday and saying about how like they just started backtesting the model, and I told them like don't look at the last 2 weeks. Why? Because that's not the easiest setups you will see. It's been a little bit harder. Price has been very volatile. So start by learning with the easy setups, go back, go further than I was saying, further than July. But truth is, once they get better, they'll be able to see all the setups here. And we've had some harder setups to identify. So it's very nice to see an easy setup just like this. Standard deviations, not much use today on the NASDAQ. But as I always say, I don't utilize standard deviations as objective. If I have a range to the left side, I just use them as confluence for objectives. So for example, having our 3 standard deviations aligned here, as well as if I'm not tripping, I can see, oh, 6 is far. 5, yes, okay, so 5, 5.5. Now, as I said, breaker block standard deviations in this specific setup did not align too well on NASDAQ. Aligned beautifully on ES, low-hanging fruit between the reversal range here. And if we look for standard deviations at the lows of this initial consolidation, but you did have a low resistance swing to the left. Just all in all, a very beautiful setup, very simple setup to identify. And if we look to a final objective, right, which is the low of this range, it was wonderful 3.48 R, leaving a runner, of course, to those relative equal lows, which align with midnight opening price, which was the objective. And then that's up to you, right? I would never allow such a big retracement for me to be in this trade, even if I'm on a runner, because this is 200 handles. This is a crazy big retracement. So from this point on, I probably have a stop if, well, you know what? Let's say the real stuff. So I'd look at this range right here, premium and discount. Well, actually from this point, I'll look at this range. I'd see that my premium inefficiency is here. So this is now my stop. Once we trade down here, I see that we rebalanced this gap and traded lower. So basically just trading back in this gap that we already rebalances to me as the invalidation of this setup. So my stop would be at this swing high, just not allowing it to go above. I can allow myself to give back 73 handles in cases where my stop was 41 handles, right? Very volatile markets. But I'm not going to allow myself to give back 200 handles just to gain a possible extra 28 handles. So definitely something there. where I could have 5 to 10 point stops for NQ. How I miss those days. Well, you know what? Here's the thing, Wolfe. With prices being more volatile, truth is, it is proportional. It's the same thing. I don't care. Because I have 41 handle stops instead of 15 handle stops, which were the average. But truth is, my average take profit, my average low hanging fruit here, let's talk about average low hanging fruit, was 52 handles when I did the back tests in May, I believe, when we had live back testing calls, and now you see 30 more handles. So 15 plus 30, we're looking at 45, and 52, sorry, plus 30 gives you 82. So the truth is, it's all proportional. So who cares about how big your stop are you have the same risk because you're always risking the same amount of money, at least with that's how I work. And your onside runs are proportional to your stop because of volatility. So even if volatility is higher, you are allowed to make a shit ton of money. So I don't see that as a problem. It's irrelevant overall, just risk manage. Yeah, exactly. So it doesn't change anything. My setups are not paying me more or less than what they were before because everything is proportional. That is the setup I saw, and we are going to visit this possible setup, but truth is, it's like what I'm always saying. I'm not going to enter a trade at 11:40 because that's going into lunch, and when do you see lunch expansion? Very rarely. But you could have had a PM continuation. And as I always say, I don't trade the PM like that. The only time I trade the afternoon session is when I have a lunch rate, and we did not have a lunch rate in this specific case. So yes, what did we do after? Well, we retraced into our range, and if we look more specifically in a 15-minute chart, I'm actually going to remove these drawings just so we can see something here. Let me just remove this. Poof, poof. And there we go. There we go. Okay. What did we do? Well, all we did with this retracement move was retrace into our 15-minute intraday inefficiency before continuing lower. And then we had, for example, the premium discount of this leg. Once we invalidate this PDRA, which is what? Our premium inefficiency, then this tells me we are then looking for higher. But as you can see, we formed SMT at the end of the day, with NASDAQ being the weaker asset, staying consistent, failed to reach the highs from I was going to say from the morning session, but from the London close pretty much. So just an important intraday high, while ES managed to reach this level. So what was the main opportunity? The initial short. Could you have found a long? Yes, but if you're always trying to trade during lunch, well, at least with my model, you're going to be very inconsistent. So I just don't look for trades during lunch. Not at all. Yeah, exactly, Jen. So, like, why would I look for anything else at this point just because I've already had my first move? I have my move. I know my edge. My edge is shorting here, shorting high in premium where everything aligns. SMT, my higher time frame context is there. The news context is there. Power of three makes sense. I need to revisit the daily open to form the low of day, even though it went in the opposite, right? Right? But I do need to distribute lower. We've manipulated higher. Relative equal lows right here are also London lows. I have a London framework. Like, there's no more textbook setup than this short. And as you can see from the delivery, it's awesome. The textbook, like the perfect setups, don't always deliver perfectly, but it's really nice to see. And we usually tend to associate it to that just out of human nature, right? That is all I would look at today because, as I said, if you weren't in this first short, what's the point of looking at further going into lunch? These trades to me are lower probability, and I don't want to spend my time trying to trade lower probability conditions. I'd rather just say, you know what, I missed my setup today. How do I make sure I don't miss it anymore? Do we have any questions about everything we just looked at? Possibly a setup the setup we looked at. Maybe you guys have some questions. I am open to hearing them. Great coverage as ever. Very pleased. Well, I am glad to hear that, Wolfe. It's very nice to see 8 people in here on a Friday night. As I said, we're usually in here just chilling, 2 or 3 people, just vibing on a Friday night. It's very nice to see all of you hard at work, but you gotta remember, gotta enjoy life. I'm going out tonight for a friend's birthday, so I am not gonna be back until Sunday for our customary weekly outlook. But I wish you all a great night, a great weekend. Go take some time off, go enjoy. To, we trade for 3 things, right? And that is your time freedom, financial freedom, and freedom of mind. So you want to have your free time? Sure. You want to have a bunch of money so you can do whatever you want? Sure. Truth is, you got to enjoy that. You got to be in a state of mind that brings you peace. And that's why I trade, and that's why I am going to go enjoy. And yes, another birthday, Matt. I told you, they are so spread out. All my friends, like every month we have someone's birthday. But yeah, it is fucking crazy. There are people on Fridays drinking and having fun, traders reviewing. You know what? The best traders, they do both. That is the truth. The best traders, they go out, they enjoy themselves, but they are here. In my case, beforehand, but they come back and they are locked in. You gotta be, it's all about balance, right? Just like the markets. It's all about balance, rebalance. You gotta have balance in your life, and that is something that I have been learning for the past 2 and 3 months, and constantly trying to have. Have a great weekend, boss. Relax this weekend a bit, huh? Yeah, I'll try, Wolfade. That's what I'm doing. Trying. I wish you all a great night, and we will see each other on Sunday for our weekly outlook. You guys have fun.